In this video we are going to briefly analyze a trade idea that used elements of both Fractal Flow Strategy and the recently released Market Maker Strategy. This is a good opportunity for you to see how these two perspectives can complement each other in an almost perfect way. Without further ado, let's try to analyze the details of this piece of price action in front of us. From number 1 onwards, we can see that price is naturally following a downward flow. At around number 5, we can safely say that number 4 is a high, but not a confirmed high in the light of the fractal flow method. At that point it looks like price is following its natural flow without intervention of any sort. We can usually observe that by identifying the zigzagging motion of highs and lows without behavior that seems too organized. Observe that between number 5 and number 9 we have a minor downward flow as well, which seems to be a smaller carbon copy of the major downward flow we already identified. The difficulty of this market begins in number 9, where both fractal flow and market maker methods begin to give signals that it's time to trade. Under the fractal flow method, number 9 is a fractal candle signaling an upward movement. Beyond that, we have a second-degree reversal divergence between minor lows number 7 and 9. We also have a third-degree reversal divergence between lows number 3 and 9. However, we must not forget that divergence setups still need to function within a contextual framework, and in this particular case, the advanced divergence signals given are against the natural flow of the market. Under the light of the market maker strategy, we can safely say that number 3 could be used as an axis of market manipulation to be exploited in number 9. However, observe that the previous surrounding of number 9 lacks the elements of what we call the tridimensional axis of market manipulation. We have no von Riestorff effect before 9, for example. In fact, we have the exact opposite, which is the market functioning in its intervention-free form. The interesting thing here is that right after number 9, the almost exact situation happens again, but this time the fractal flow signals agree with the overall flow of the market, and all the elements of the tridimensional axis of market manipulation seem to be present if we consider that high number 8 could be used as an axis to be manipulated in number 10. Observe also that number 10 is a fractal candle pointing downwards. This is one of those situations where the minor flow seems to trump the major flow, and you can only predict that by looking at the subtle details of how candles move between market vectors. Beyond that, we have an interesting line that was drawn from number 2 up to number 4 connecting the major highs. That downward sloping line lands exactly where candle number 10 happens. This is the irony of this market. The combination of setups that happened in number 9 seem to be technically stronger because of the fractal divergences, but the setup that happened in number 10 was technically and subjectively strong, which is a much more powerful idea in the market. After number 10, the market drops significantly, which confirms the idea that number 10 was indeed the inflection point that we would want to pay attention to. Observe that the difference between setups is more subjective than technical. In other words, what makes a good setup is not the clarity of the techniques involved, but the qualitative aspect of the combination of techniques involved in a broader context. Another interesting detail here is to observe how the simple connection of highs 2 and 4 ends up revealing the small frequency around high number 10. It's really interesting to notice how the fractal flow strategy and market maker strategy function together, and one can point to the non-obvious flaws of the other, and therefore, they can be stronger together. Part of that is because just like you have to consider different contextual elements to form a trade idea, you can consider different strategy perspectives to enrich your contexts even more. Some of you asked me about the difference between the fractal flow strategy and the market maker strategy. The fractal flow method is about understanding momentum in the most accurate way possible. The market maker strategy is all about understanding how market makers manipulate retail traders, and how we can take advantage of that. Interestingly enough, a lot of times they point to similar opportunities in the market. The good news is that one can confirm the setups of the other. In other words, you can use both perspectives as a unified strategy. You don't have to think about them separately as long as you understand them individually first. That's absolutely important. If you wish to understand all these details on the chart, don't forget to check out the strategy store in the link available in the video description. If you enjoy the videos I make, don't forget to click the like button, subscribe to the channel, and leave your feedback below in the comment section. Thank you for watching, and I hope to see you in the next videos.